Guys, welcome to Wagza Forex Trading Institute. Today I'm here to share with you some concepts from bank trading. So guys, please make sure this is gonna be our short mentorship on bank trading, where I will be trying to share with you how to use ICT order blocks, rejection blocks, together with flip zones, and also explaining you and showing you the effects of order flow, institutional order flow, ne? So guys, I'll try to be fast here. I'm gonna be straightforward. I will just hit the points straight. I won't try to explain a lot of things here, just going to show you the things that I want to share with you. Simple. So I'm gonna share. I'm gonna start here, guys, where our chart is starting. So I'm gonna be using an hourly chart as usual, as you've seen from the PDF for the announcement that I shared there. So guys, this is Nasdaq hourly chart on Nasdaq. So now let's say it's like this. I want to be explaining and showing you the effects of how to study price. So this is bank trading, guys. No trend lines, no indicators, no system, no robot. So guys, if you can check here, the market have been trending down, you see, but then there is a moment where the market then started to change direction out of the blue, then it started going the other way around. So guys, if you can be able to see now, here it was a nice downtrend. You know the moves of the downtrend: impulsive retracement, impulsive retracement, impulsive retracement. The I mean, like, the zigzags. So the thing that I want to show you, you have to be able to trade the upcoming move, né? The upcoming move is the important move that you have to understand. If it gets you on the wrong way side, you are dead, because the market will be fast. So if you can check here, what happened, there is this condition where the market changed out of a sudden, you see. So guys, let me tell you something. Let's try to change this color. I want to show you something, guys. Now I'll be introducing like what we call imbalancement, guys. So please make sure that you understand everything here. No man, I need this a bit darker color. Okay, yeah. So guys, that's why I'm saying don't chase the market. We don't have to chase the market. If you see the market selling, don't sell, because there's this thing we call imbalancement. If you can be able to see the imbalancement. Okay, the market was running down. Here you can see we're only having sellers. We had a high momentum of people who were selling. Then there was a high pressure of sellers here. If you can check the candlesticks, they created what we call a bearish liquidity void, if you can be able to see. And then that's why I say don't chase the market, because there is this what we call imbalancement in price action. If you can check here, price came to refill the gap that was there. Remember, the market has to move in a balanced way. You don't have to be biased, because here if we check, we only had sellers, so we also have to have buyers. So if people are only selling, who will be buying from the market? So remember, as I say, we have to balance. The market has to balance both sides of the market participants, so it doesn't has to keep selling even if it's trending down. That's the reason the market is going in a zigzag way. If people sell, there are those who are buying. When we sell, others buy, and then when we buy, others sell. It's a two-way traffic. So if you check here, we only had sellers. We didn't have like many buyers. You see these candles. Then this is unfair for the market to go in this way. So if you can check here, we had something that we call imbalancement. So this is the move that sometimes I usually trade a lot, because the market, the moment it crashed down or up, meaning I take the opposite direction. So if we check here, the market started exactly where here, and then here we had a rejection block. You see, so we could be able to catch this move using a rejection block on the lower time frame. So guys, there is no need for us to switch to a lower time frame, as long we know what we want. So here we had a rejection block. If you can be able there to see rejection, let me try to highlight this rejection block, guys. Okay, we had a first rejection there, and then the second rejection there, that was giving a retest. And from there, this is showing that order flow is serious about changing the trend. This is showing that, remember what is order flow? Order flow is just the like I can say the study of how the market orders enters the market. So meaning with here on these rejection levels, two levels, you can see sort of equal lows there. And there are institutions who are buying in this level. Why? They have to balance the gap that was unfilled here. We only had sellers, so then we also have to have buyers. And then the market, if you check the very same momentum it crashed, the very same momentum it went up. You see, then from there to there, equal. Then where do we set our TP? TP1 here, TP2 there. It's up to you. But then here the gap was filled more than 100%. Once it fills this gap, guys, this setup it's no longer working, it's invalid. So here you only scalp from here to here. Why? Because the market has to imbalance this previous move. Simple. We are done. Let's move to the second part. As we're moving forward, we are done with that scalp. And then if we can check, guys, what we call order flow. Remember, the market, guys, is very easy. It goes with imbalancing. You see now, we're having this gap against this gap. You see, we're having this gap against which gap? You see, we're having this gap now. Remember, liquidity inject bullish liquidity void. You see, we only had buyers. Then it also have to come and what? And do the very same thing. It balance before it starts continuing with the trend. So guys, trading imbalancement in price action, it is very nice because mostly you won't chase the market. If you can check, let's check what I'm talking about. Same blocks. You see, exactly same blocks. And then this is the imbalancement, this is the imbalancement that I'm talking about. Let me try. It's just that, guys, you are doomed about because of these candles. Maybe they are blindfolding you. This thing, guys, is not that hard as long as you know what you want. Let's choose yes, clear card. You see here. So how, like you see here, it was trending up. This was a bullish liquidity void, and then it came back and refilled the gap. You see where it started here. Remember where this where did this bullish liquidity voice started here. So now I'm gonna be introducing you what we call ICT order blocks. ICT order blocks, you see this bullish liquidity void, check where did it start. It started here, so we take from the previous red candle or opposing candle, you see, and then we extend, and then from there we will be expecting the price to come below, and then once it's below this level, this is our ICT bullish order block. Guys, please mark this. This is our ICT bullish order block. You see, we take from here, from the start of the bullish liquidity void, before we take the previous candle before the start of this bullish liquidity void. Then if you can check what happened, price came in, activated our order block, or it came and refilled what we call imbalancement, or the previous gap that was filled for only what, for only buyers. We only had buyers, and then it came back, and what it made, that refill. You see, same gap. Check these blocks, same gap. Then and then from there, check where price it went, and then as we go forward, I'll be explaining you what happened after here. So okay, how to catch this blue block or blue move, or this bearish refill. We do this, we can apply, we have two things that we can apply. We have what we call bank's liquidity level, or you can also use rejection blocks. So let me change this color so that you can be able to see clearly. With this thing is very easy, guys. You see here, I'm now taking what, the rejection of the highest level, and then now we'll be studying the market price. Now this is what we call So guys, we'll be studying price. This is what we call order flow. Order flow, simple things, guys, simple things. Order flow, we study the market, like we study like the market performance indeed. Also together with the market momentum, like the momentum of the candles. Né? So if we can check here, guys, let's be lenient. We had something like this. If you are able to see, let's just try to I want to show you something simple, something that is very simple, guys. I don't know what's blindfolding you when you go to the charts. Guys, if you can check here, ish. Let's make it okay. Here is it. What's wrong with this thing? Okay, fine, guys. If you check here, we had a bullish liquidity void that was running up, ne? And then after some time, we had something like a break from the even here. We had equal lows. You can see we had equal lows there. You see, we had equal lows there. So if you can check, the price ran up from here to there. It was balancing this previous move that I've already told you about. And then here, if you can check, there is a formation of sort of equal highs in there. But then these equal highs, they are not like obeyed exactly 100%. But then if you can check, this is a rejection block that I've identified because we've drawn it from the highest rejection. And then if you can check, we only had how many rejections that retested inside the zone? We only had two perfect rejection retests. Only had two. Let's avoid this one. Let's avoid this one. We're talking about accurate things here, guys. I'm showing you accurate things. We only had one, two. So if this one was inside, at least it was gonna be three. So this is showing us good. This level is very strong, and above this level, there is a lot of money, guys. There is a lot of money. There is a lot of money. And let's go back. There is a lot of money in this way. There is a lot of money in this way. Uh, if you can check why I've drawn this dollar is showing that there is a lot of liquidity, there is a lot of money. Why? Because there are those traders who think maybe the market will break above, then after breaking above this gray level, it will continue buying. What they do, they set buy stops. Then there are those traders who think the market will do what? Will maybe maybe like obey this level accurately and go down, then they sell, and then where do they set their stop loss? Above this level. Then this is the disadvantage of using a stop loss. That's why, guys, mina, I don't use a stop loss because I don't want to donate my money to the market. I better blow than using a stop loss. Why? Because check, before the market trends down from this level, what happens? There is this thing that we call liquidity injection. You see, what's this? This thing is just adding money in the market. That's what we call liquidity injection. Is just kicking out many people, activating many people, buy stops, hitting many people stop losses. Then sometimes I'm sure you've encountered this. You leave trades there, and then out to find which they are hitting your stop loss, and then after the market takes your direction. So the moment it breaks above, it's where I sell. Mostly I keep selling because I know with this it's a sensitive level. As I can see, I've identified nicely my rejection block, and I also have the aim or the prediction in my mind that okay, my aim is to get this imbalancing move. So the market has to, so like the chances, if we are here on our rejection block, the chances for the markets to go up is 10%. 90% of the chances for the market to go down because it has to balance this previous bullish and filled gap. Do you understand? Then this one, it's a button. I can say this is just a confirmation to show you the market is still coming to grab all the money that is below. There is also a lot of liquidity here, because there are those traders who they say, hey, this is a double bottom, and then now they are busy buying around this level. Then the market blindfolds you and makes like it acts if maybe it's obeying your level. Then afterwards, what happened? You see, people will be busy buying on during this level, and then what happens? Check how the market broke. This is what we call price violation. These previous equal lows, they were violated simply. If you can check how this candle grabbed or kicked out many people there. This made a lot of money to the banks, to the brokers, to the market movers, because there are those people who were buying here. But it's a double bottom, let's buy. Okay, you bought, then check out the market to show that this candle is sponsored. This is a sponsored candle. It doesn't even have a upper shade. You see? And then what happened? It kicked everyone out. Then it came back. Many people were like, they were confused. What's happening here? But then for us as bank traders, where do we start with the move? We start with the move here. We see things coming before they happen. Check here. This is a liquidity injection. This break up, it doesn't mean good we are able to buy. No, we don't buy. We sell here. We sell with the aim of knowing that the market has to come back and refill this unfilled buy side liquidity. And then if we can check, the market came back and made what? Activated our ICT order block. ICT bullish order block. How did I draw this ICT bullish order block? Simple. I've took this red candle before the start of the bullish liquidity void, and then what happened? Then it came back and activated. Then remember, guys, this is the hourly chart. So from here to there, it's a nice hit. So if I can tell you something, how do we know, Gucci? The market like will come and do something like this here below this level. There is this thing we can call it mitigation block. If you can check, do you see this red candle here? This red candle during this bullish liquidity void, it's very sensitive. It shows you the price can come and do something during that level. If you can check, if I'm lying, just kill me, guys. You see, let's delete these ones as we go forward. You see, check what happened. Now I'm taking that block only, that candle only. What happened? Don't tell me, good guys, I don't know what I'm doing. Just check. Simple, guys. As long as you can be able to study price. You see this, guys, this is a mitigation block. The price, it means good, it will come here. Obvious. It will break everything here and come and run here fast. Then one running here, it will rest on this mitigation block. And then you can be able to take scalp trades here. This is a mitigation block. You enter inside, stop loss where this candle ends. If I bought here, for those who love setting stop loss, I set my stop loss where? Here, where the candle end. And then I scalpel, and then at the end of the day, I'm eating something. So let's move forward. As I was telling you, I want to show you something. We are now getting done with these ones. These ones, everything that we're getting done, we're getting rid of it from our chart. So now, guys, let's go down. I want to explain to you what happened after this activation of an ICT order block. But if you can check ICT order blocks, they're also accurate. From here to here, they got activated twice, and then from there, price trended away from our ICT order block. So all those trades which were placed here during ICT order block, they were won. As I was saying, all trades that were placed here, they were won. So now check what happened. The price came back. So meaning which after here, okay, where to exit? If you entered here during ICT order block, you exit here. This is a rejection block, guys. You know how I draw rejection blocks, guys. I won't lie to you, guys. Everything is clear here. I'm trying to share all my, to do all my best here. And this is a rejection block. Don't ask me how I drew the rejection block. You know now. So let's save time, guys. Let's save time. rejection block. You got how many entries? You see? So first one, high. The more the candle has high rejection, the more the rejection block gets sensitive. Then one, confirmation, you extend the level. Then two, it was a nice scalp. Then three, nice trade. And then where will price run now? Let's check. Let's check what happened. Let's zoom out a little bit. Then if you can check, as we had that rejection block from there, we had that rejection block from there. If you still remember, I'll zoom it in. The one that we got dual retest, and then what happened? Then something like this happened. So as I'm saying, guys, let's delete these ones. As I'm saying, guys, before the market change the real trend, or before it makes a big move, the market will tend to act as if like it's breaking below or breaking up or giving you a false signal, but we call it what? Liquidity injection. It's injecting liquidity. So if you still remember this level, you see this level, what happened? Let's see this level. About this level, what happened? Let's push here. You see price was nicely retested there, but then what happened after? Ish. What came happen after here? You see here it was like, okay, let me zoom out. You see this is the very same rejection block drawn from that first level, and then here, then what happened here? Before it starts trading up, it broke below our rejection block. It's injecting liquidity, guys. I think you can be able to see this. Remember, below this level there is something like this. I told you before, this is a bank's liquidity level. Either there is something like this, what we call liquidity. People are setting stop losses who are buying around this level, and other people are busy setting sell stops, thinking okay, the market will break and continue selling. Unfortunately it broke, but then it went where? It went up after some time. And then check what happened after from that level. Check. Easy, simple. This is a strong trend. So you see, Gucci, using bank trading, you get things early before they happen. Simple. So let's move forward, guys. Let's move forward. Let's delete everything so that our chart stays clean, always. Clean charts, guys. Clean charts. If you can check now, the market is trending where? Up. So how do we trade this? Check how do we trade this run or this move? Okay. Already we got our buys here initially, our buys somewhere there from coming from our rejection block, if you still remember. So what happens? Remember the market trend, it's an uptrend. How do you trade an uptrend? You know, guys, the uptrend has retracement and impulsive move. How do you see impulsive move? Remember, this is an uptrend, so meaning the buying pressure is too much, the buying momentum is high. So obvious, the candles, if you can check the study price, if you can check, the green candles are bigger compared to what? To red candles. Guys, I think everything is simple, man. I can teach you everything. Check. Red candles is smaller, green big. Red smaller, you see, green big, small. Okay, so now we're gonna be introducing you. I'll be introducing you to flip zones to be able to add more trades and to catch the trend in case you miss it from the start. Okay, everywhere there is impulsive, you see, we apply. Okay, let's change the color. We apply a zone, we draw a zone. What is a flip zone, guys? A flip zone, you know, guys, you know these things. It's just that you are relaxed. You see, here's a flip zone. A flip zone, it's something like this. Maybe I can say in simple ways, when support is broken, it becomes resistance. When resistance is broken, it becomes support. Something like this. Check what happens. You know this, but you're not using it. Okay, here it was resistance, it broke. The moment it breaks up, if in case you miss the breakout, you can wait for the retest. then retest. What do? You add more trades, then goes there. Same thing, guys, same thing until the trends end. Same thing, guys. I want to show you something that I don't use. Yes, if you can check. Same thing, guys. You see, it was resistance, and then it broke. It became what? Below it's now becoming what? Our support. You see, so now you're having one entry, second entry, then the trend continues like that. In case maybe if this one it's not visible enough, but then it's visible for me because I know what is in flip zone. It's visible enough. It's just that it's not accurate. Remember, forex guys won't be always accurate on everything, so some other things you have to hunt for yourself. You see, resistance, it broke, it retested, and then same thing, guys. You can end up having many trades here. You can, and that's how I trade too. So you see here also, it's just that it wasn't accurate retest, but something imaginary retest. It was a low retest. So you know, guys, forex won't give you everything accurate every time, because if everything is accurate, people won't. There won't be people who are losing. So you see now, guys, this is too much, guys. This is too much. This is too much, guys. Like, I'm trying to make everything simple. You see, even here you got even two retests. Ah, ah, you were gone. You see how we trade these things, guys. No indicators, guys. No robots, no systems. And then another thing, always know this is forex. Who also have liquidity injections, like here. You see, liquidity injection. Then many people were thinking, now the market will start continuing to sell. And then after some time, the trend resumes. You see, same things. So resistance, and then retest, and then here support, then it breaks, flip side. Same thing, guys. But then now let's move on the bigger picture to see how to catch this move. Like, let me zoom out. So you see now, at the end of the time, how many moves you got? 1 2 3 4 5 6. Guys, 1 2 3 4 5 6. Guys, this is a lot. This is a lot. So now you are able to, these are flip zones. We'll call these flip zones. So now we want to see how to see if the market will be able to change, or will break the trend, or will break the market structure, or something like that. You see, so now we're gonna be identifying the break of market structure. This is hourly chart. So you see, even if you want to place trade, guys, as usual, as I said, you stick on one time frame, stick on one time frame, stick on one time frame. Don't confuse yourself. You are using flip zone. You know, good, okay, retest, I see it here in 1 hour. You don't have to go to 5 minutes, you don't have to go to 15 minutes. You stick here, then you buy. Every time it comes back in the blue zone, you buy, you buy. Guys, these things are simple, guys. And this CFD, so obvious, if you're having 1 2 3 trades, 4 trades from here, then obvious to here they're almost running from a minimum of 30K. Guys, if you are relaxed, then you won't learn. So now, guys, I'll show you soon on how to see the market structure, the break of market structure, or the shift of market structure. As I'm saying, now I want to show you a shift or a break of market structure. So let's, before we move back, let me show you something. You see, guys, this is what is that thing? What is that thing? Drawing mode. You see this thing, guys? It's an uptrend. You know, it moves in a zigzag, You see, and then what happens? Support, resistance, support, resistance, support, resistance. Here we buy, we buy, we buy, something like that. It's not like I didn't draw them accurate, but then it goes in this way. And then what happens? This is our higher low, higher high, and then this is our lower high, and then higher high. You see, H, guys, you know these things. And then this is what our lower high, Why lower high? Because this low is above this one. Then HH, there's something like that, guys. Like this is a pattern, guys. This is a pattern of a market structure. A lower high, you see, and then what happens? It continues. You see, it continues. So the market structure, it goes like this: higher high, lower high, lower high, higher high, something like this is an uptrend, and then vice versa, a downtrend. So how do we see a break of market structure? Check what's happening now. Check what's going to happen. Guys, I think you are able to see everything that I'm sharing with you. You see, this is our zigzags. You see, these are our zigzags. These are our zigzags. These are our zigzags. Uh, uh, Let me show you again. These are our zigzags. It's just good to, like, they won't be exactly 100% zigzags. You see, here, 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 here. You see, here, there, here, there, here, there, here, there, here, there. Like, guys, you see, same things. So it's just that these candlesticks, sometimes they are blindfolding us. So okay, let's erase this, and let's see now a break of market structure. Let's clear all these things out. Let's clear all these things out. I need to moving forward, and then check what's happening now. There is something that we see here. Check this. There is a scandal here. Here it's where we see our break of market structure here. Let's change the color to be clear. Let's change the color to be clear. You see, now it's clear. Then here it's where we see our scandal. Now if you can check, the market is no longer doing this. The market is no longer, like, you see, going up. What it's doing now is doing something like this. And then what type of market structure is this one? You see, so this is how we see our market structure. This is the failure, like where the failure starts of the continuation of the zigzag. If you can check here now, this high, if the market was serious, like where, okay, here, you see, in this level, this is where we see our BMS or BOS, break of market structure. It's just good-ish. You know what? Let's do this, guys. Remember, bank trading, it's accurate. It's accurate. Accurate. I want to show you accurate things. You see from here. You see, this is what we call what, a BMS or BOS, break of market structure, or break of market structure, or shift of market structure, anything that you can call BMS, break of market structure, or BOS. Simple things, guys. Why did I highlight this zone here? If the market, if this is a nice confirmation, if the market was serious about going up, it shouldn't come and clear this. We had this first low clear, the way is it, this one, you see, this it should be in our zigzag and went up, and then now the market is shifting its structure, you see, then it's no longer going up because it's now, like, failing to break above this high. If the market was really about going up, it should have come and break this what, this higher high. So this is our higher high, but then the market, it failed to break below. Now it's breaking here, and then from here it's where you see a nice confirmation. Good, oh, the market structure has shifted. Then what happens? The market structure, once it shifts, it's changed from an uptrend to a downtrend. Then if you can check now, the market is moving in a zigzag way, going where? Going down. You see? Or let me zoom it out so that it can be clear. You see, now the market is going zigzag or down. It's no longer going up. Oh my god. Yeah. So if you can check now, the market structure is doing what? It's going down. You see? It's going down. It's going down. It's going down. Yeah, so this is a downtrend. So the formations, or the characteristics of an downtrend, you know, it's a what? It's a lower high, and the lower low, lower low, lower low, lower lows. These are lower lows, lower lows. So you know, think these things, guys. So I'm just wasting my time here. But then I'm just trying to explain to those people who don't understand. And then at the end of the time, we combine all this knowledge, then it forms a nice thing. So if you can check now, guys, we had a what, a BMS here, or a break of market structure, where here on this block. Then from them, what happens? We know good, okay, the market price will come and clear, or it will come and break below this previous low to continue going where, going down. Then from there, what do you do? Then here, if you failed, if you fail, guys, please listen carefully. If you fail to sell here from the start of the BMS, it's fine. You can come and sell from the breakout of what, of this previous low, or anywhere during this blue or gray zone. Then from there, once the price trades off, it's no longer coming back from that level. Sometimes it can break and do something like this, give you a retest, but mostly you can see this is a breakout, and then it can come and give you what, a retest from that level, and then continues trading down. So unfortunately here we didn't get an accurate um, retest. So as I was saying, that you have to study price. If you check here, as it was an uptrend, all our green candles were bigger in size, but then here after, now the red candles are what, are bigger in size. So what does this mean? It means good sellers are now gaining pressure. Then the market, remember this thing, guys, it's working on demand and supply, the law of demand and supply. More sellers, it will go down, more buyers, it will go up. Then if you check here, these candles were big, and then what happened? It came in, like, you'll even know good, okay, the market will come and break below. Why? By seeing this, this is an order flow. By studying price, by seeing this, like the bodies of the candle, that's how we study the price. You can be able to see which the market will come and break. Then if you check now, the green candles are strong, are no longer bigger compared to green candles, you see. So this is showing you good, the trend is now what, strong, bearish trend. So we also apply what, flip zones on catching the trend. So remember, flip zones, we use them to catch the trend, you know. Okay, here let's see if we don't get an entry from here. Previous level, even here it was retested more than several times, you see. And then here it was our what, it was our support, you see, support. Then here it was our support. Then what happened? From there it breaks out. Then after breakout, what did what does, like, this level tend to be a flip zone? It's a resistance. So then from there we are looking to do what, to sell, you see. So what, to sell. So if you can check now, this is our flip zone. One entry, second entry, third entry, fourth entry. So guys, if you can check here, we had how many? One, two, three, four, like four opportunities. So that's why we say Forex needs patience. Why? Because sometimes you can sell here in the first one, and then the market what, come back for a retest, and then it come back. So this level, it was also acting as what, as our buy side liquidity level. So I won't focus much on that, but then I'll focus on showing you that this level is a flip zone. And then check what happened after this level. Check, guys, check how prices went down. Like, even if I can zoom out, check. So you see which everything was simple from there. And then here on this level, guys, mostly the price, let me tell you the secret. The price, this is a strategy for Nasdaq. Don't be surprised when you see me saying, guys, 3:30 obvious to chase sell Nasdaq. If you find the price near this level, simply know that 3:30 Nasdaq will sell. You don't even have to use an indicator. You don't have to go somewhere and Google. You don't have to, like, robot or something. Just know, starting price, the market will sell. So you don't have to wait for anyone. don't have fear, just put fear aside, you sell. If you can check here, it was 6 o'clock, 7 in the morning, 3 o'clock, you see, 3 o'clock the price sold here, and then it was on this level. And then let's check this one. It was late hours, it was, yeah, 3 o'clock, same time, you see. So 3:30, then the market opened. Then what happened? It sold, you see, and then it never came back again on that level. It sold, you see, on 3:30. So the final run away from this level is what? 3:30. So another thing, remember, we use flip zones, flip zones, flip zones. Here, here, sell. Here it was giving you a nice watch out, you see, it sold. And then here, another flip zone, initial flip zone, small one, but it's giving you in. So guys, the market, don't chase it. If you find it selling, just relax. It will give you a flip zone as an re-entry. So you only have to wait for a flip zone to be created for you so that you can be able to catch the trend. You see here, flip zone, entry, sell, and then it came here again. It gave you something like this, what we call an order block, order block, ICT order block. You know how I draw it now. We take what? The green candle, and then let's move forward, and then there's a what we call bank's liquidity level here. From this level to that level, this is a bank's liquidity level. So simple things, guys. Bank's liquidity level, bank's liquidity level, what's happening above? Once I say it's a bank's liquidity level, it's a level where like we're having more, I can say, equal highs or equal lows. And then what happens, the order flow against that is that above the level there is a lot of man, or below the level there is a lot of man. So the price, before it trades off from that level, mostly it's likely to create what? To create a false breakout. So if you can check here, price was just imbalancing, so this sell was very nice. I remember I saw, I sent this signal this other day. I was at Soweto. So guys, this was a nice signal that we managed to catch. Why I just entered this signal? Because I saw this imbalancement, you see. And then from that imbalancement we got even more than 100%, because the price, the imbalancement was like favoring the trend, you see. Buy, you see, we only had buyers. And then what happens? The very same momentum it went up, it created it has even filled the gap. The very same momentum, check, it went up so quick, it went down so quick. So this was a simple snack imbalancing. And then what happens? It continues where? Going down, trending down. So guys, I won't keep like identifying all levels. Let's just jump others. Let's now identify other levels. Let me just identify maybe levels that maybe are sensitive. Oh, we're having another level here. This is a rejection block. So guys, rejection blocks are applicable to assets that are volatile, especially on NAS, and also on what? On gold, especially on NAS and gold. The ones that are more volatile and also creating candles that are rejecting. So you see how I drawn this what? Rejection block. Simple like that. What happens? You scalp buy, nice setup there. You see here, imbalancement. This was a buy side, and then what happens? The price came back and imbalance. You see, the price came back and imbalance. You see, this was the buy side, then it came back in balance, and then it gave you a nice retest. Where that did it end? The very same level where it started, it ended there. Then what happened? Scalping there, and then now he has another imbalancement. Guys, these things are, now don't tell me you don't have a strategy to trade Nasdaq. Here, imbalancement, it crashed down, it came back up. Quick, so quick. It was a fast match. You see? So afterwards, if you can check, here it's another ICT order block. You see? ICT order block, how did I draw it? The red candle there. Or you can take the way the body is starting everywhere. It's up to you. So let's take the body, is fine. You see? The red candle, it went up. This was a fast move, and then it came back, it also refilled the gap, and then it came where it retested or activated your order block, and then what happens? It went up. So how do you catch this order block? Guys, you don't have to wait for the price to come back in here. You just set a buy limit where is where this candle is starting. You see the level where it's starting, you set your buy limit, then it activate, because mostly a strong order block it's activated by a rejection. Then check what happened. It went where? Up. So quick. So quick. And then we had an balancement in a bigger picture. If you can be able to see in a bigger picture, guys, you have to eat carrots. Otherwise, you'll miss a lot of things. You see, imbalancement in a bigger picture. This was a buy. It was like a buy side gap, and then check what happened. It came in balance the very same way, and then before crashing, what happened? We had a liquidity injection lap. You see, because this was the highest high. Then what happened? You see, other prices, like, how do you see, could maybe another thing that I can show to you, how do you see that the market will end up like crashing down? It's when you see like maybe these levels, like I can say highest points starting to trade away below from the what, your your highest level. You see, if you can check here, now these levels, highest levels are starting to trade where? Below. Like they're now like going down, slowly but surely going down. You see, this is a nice confirmation or signal from the market to show you, good, I know the market will crash. And then from there, what happened? We had this liquidity injection. People stop losses were hit. People buy stops were activated there. And then let's say maybe you meet this sell signal around here. Where do you get it? You get it here. You can use your flip zone, guys, as I showed you. Can use your flip zone. Just that this one was not accurate. Then what happened? This should be inaccurate. This should be an accurate flip zone. It's just that this one was violated. You see, we didn't have an accurate retest. Have an accurate retest. So this is how we do the bank trading thing. So at the end of the day, I hope you managed to learn something. So even today, the trend is still trending down. So this vision, or I can say maybe saver or a platform, was updated later on. Yeah, later on yesterday, if I'm not mistaken. So anyway, guys, this is how we do bank trading. This is how we do applications of everything that I've shown you. I think I've shown you a nice course, nice short course. We managed to cover flip zones, trading flip zones, imbalancement, trading ICT, order blocks, institutional order blocks, together with the order flow. So guys, I think this is a lot. I even like try to explain more about banks liquidity levels, rejection blocks, including what is it? I'm forgetting. What is it? This one, yeah. Mitigation blocks. So guys, I think this is a lot. This is the right time for you to make sure you grab something. Then from there, it's your own. Like, you have to make sure you grab something, and to make sure that you've grabbed something,
you'll be sharing me results after like going a self journey. There's no need for my signals, there's no need for me to show you how to do this, where to do this, which time frame to use here. Everything, guys, I try to explain to you. Even here, we only using 1 hour. I didn't even switch to a lower time frame. So guys, please don't be confused. Use this time frame only, don't have to switch to another time frame. Everything is done nicely here. Even like I'm sure Gucci, you've learned a lot of things. Futi, like I think I tried all my best to make things simple. I tried even including break, like showing you a break of market structure or a shift of market structure, showing you how to trade uptrends, downtrends using flip zones. So guys, I think I try all my best because I try to accommodate many strategies in one video, many things in one video. So guys, this is your self journey. It's about your self journey. This industry, guys, to win in this industry or like maybe to see a way forward is when you are only alone, facing the market alone with no one helping you. At least now you have the foundation of knowing it. Okay, if arrive on the market, I open this daily chart or I open this 1 hour time frame. What is it that I have to do? What is it that I have to check? If this thing maybe if something like this is happening, what is it that I have to expect? So guys, another thing that I will tell you, Nasdaq on half past three, if it's gonna be selling or buying, make sure that you're gonna be able to trade the move on half past three. Make sure that you only use key levels. If Nasdaq it's here, somewhere here, then obvious it's gonna sell half past three. If Nasdaq it's here, half past three, it's gonna buy. So on half past three, guys, there's nothing interesting, just that the market is more illiquid. There's a lot of market participants during half past three. So don't be surprised, guys. You see Nasdaq starting to go somehow. It never goes against the trend. It never went against the trend. It's just that like maybe the time frame that you might be using, it might be a bit biased, but then make sure, guys, for nice entries, check 1 hour. This is the hourly chart. Everything was clear nicely, so you can go for a self journey, guys. Everything that I showed you here is what I use. I won't teach you something that I don't use, guys. So peace, I'm out. This is Wagza Forex Trading Institute. So for those who will be having questions, I will drop my numbers on the description so they can meet me via inbox. So even recommendations, guys, don't forget to subscribe, watch this video, like, comment, share to your friends, invite everyone to our YouTube channel. Recommendations for the videos, you can share them via WhatsApp. So guys, I'm doing this all for you, not for myself. Mina already, I know these things. So guys, please try to make sure you also practice. I will like the more if I see like people are using my things, I'll try to make by all means that I put more efforts by dropping new strategy. Like there are many things that I can show you guys. So the only thing that I need from you, show me commitment. So let's operate, guys. Let's work. Good luck. I'm out. Peace.